Greetings. Welcome to my weekend market recap, 6th January 2024. This is the first market recap of the new year. Wish you a very happy new year, prosperous new year, and certainly a profitable new year. I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using the same Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website superiorprofit.co, X handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. What do I share through these channels? I share truly high probability trades. Why are they truly highly probability trades? Because I try to combine technical analysis with market, sector, industry, rotation, fundamental, and even seasonality analysis to find my trades. If you ask out of these dimensions, which one is the most important dimension, that will be market level. And if you are following me on my YouTube channel and or Twitter handle and on my website, you would know that I am quite accurate with market direction. In other words, my preferred trading direction, not only market direction, my preferred trading direction tends to work out quite well. And why it works so well is because I look at different angles for the market. That I will do in today's session also. And I will also look back on the recent sharings that I did and see how they worked out. The market probably had not been very friendly for bullish traders in last 1 week of the market, but the ideas that I shared worked out quite well. The ones that I shared publicly, I will review them and you can probably see why they worked out in spite of the market not being so bullish. And yes, the ideas that I shared publicly since Christmas last year were only bullish trades. Before I do all that, disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, does not have to be risky, but it can be risky. It's up to how you use them. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. I developed the Q systems and I use the Q systems and only Q systems to make my trading decisions. All the Q components run on the Metastock platform and technical analysis for the USA market, that component runs on TradeStation as well. That was the last slide. Let me continue with the live system and I am going to tell upfront that I have no preferred trading direction for the current week. And because I have no preferred trading direction, I may not look at so many stocks to trade for the coming week or weeks. Instead, I will spend time once again looking at different Q aspects and why they work overall. Let me start with the very powerful single chart internal health check chart, that is USA market breadth total view. This chart has many colors, many lines, but none of them are about any stock. It is about the internal health of the market. And what I would like to do throughout today's session is to review what I analyzed earlier, shared them before knowing the results, as I always do. I only share before knowing the results. I don't like to share after knowing the result, and how they played out. Let's look back. Right on this day, probably it was a Wednesday if I remember correctly, I tweeted on this day that my market view was not bullish anymore. Looking back, prior to that, market was going up sharply. On that day, we had one candle down day for the Q Global Market Breadth Candle chart. This is a composite index of indexes, very broad index, very broad custom index representing the whole market. If you see, that was a single down day in a very long uptrend, but still I concluded for my own trading that I would not like to continue taking long trades. That was the market level view. Individual stocks might be traded on the long side, but market level view, I was not bullish anymore. I was not bearish, but I was not bullish. So I booked profit in a number of my long positions that I had taken earlier. Why did I have the confidence to share that analysis publicly? Because there were several signals that were telling that the market was very overbought. One of them came from the percentage of stocks above 50-day moving average that hit this upper threshold. Whenever it hits the upper threshold, like it did here, it has a tendency to pull back. So we were extremely overbought from this market breadth angle. From another angle, that is 3-month new high low, also we were at extreme overbought level. Let me change the color. At the extreme overbought level, we had then these up arrows. Those were, thanks to Mr. Ian Woodward, may him rest in peace, Bengo signals showing euphoria in the market. In other words, fear of missing out. That tends to come at the top of the market. Overbought market, people were buying everything. How I explain these signals, the Bengo signals, is that they are signals that people are buying everything, even those of not any value. Then all of a sudden, we had some things. We had a phoenix signal. A phoenix, that is the magenta color candle that comes at the market top, is something to be very cautious of. And on top of that, for the first time in this very long uptrend, we had very large distribution count. All those came in the market internal health check, and later on when I switch to the market ETF charts, the external view of the market, I will relook at what were the signals on that day from the market ETFs that helped me decide not to buy anymore. Now market did try to go up little bit from there and then pulled back again. As of Friday's close, it has closed below the low of the day when I concluded that it was not time to buy anymore. That signal, or the series of signals, I will show the external view also, came at the very top. At the very top, the instrument strategy that I suggest and I follow myself is not to short using stocks or ETFs, but to use short call verticals. That way one would not get stopped out, and if you did that in individual stocks that had Q360 degrees shorting ideas, then by Friday's close you would have a profit in those trades, most likely, because the market pulled back again. the stocks would have pulled back also. The Q360-degree stocks tend to be weaker than market because they are in weak industries, weak fundamental stocks with weak technicals. So if the stocks pull back at least as much as this market breadth total view custom index pullback, you would have profit from short call vertical. Now it is not overbought anymore, but it is still at a very high level in terms of percentage of stocks of 50-day MA and in terms of 3-month new high low. Still overbought, not at the extreme high, but still quite high. However, why I am not thinking of shorting is because as far as swing high is concerned, it has come down from the swing high for several days. So my stop will be far away if I wanted to short an instrument like this. What kind of stocks are doing well? Growth versus value is tilting down. So growth is not doing well. Small cap versus large cap has also started to tilt down. So small cap is underperforming. For a long time, small cap was outperforming and now small cap is underperforming. Now right here, when that transition happened from outperformance to underperformance of small cap, something was happening in IWM, the small cap ETF. Let's look at that and let's look at the weekly chart with historical trend lines. IWM weekly chart with the trend line resistances and supports that are now broken, the historical trend lines. In this area, the instrument IWM was outperforming. When it came to this trend line resistance in weekly and in this week closed just below that, I mentioned that I was not going to buy IWM because there was higher likelihood than not that it would come down. Again, it was at the very top, therefore any trading strategy would probably involve short call vertical, not outright shorting a small cap stock. IWM did try to go up, but then it came down comfortably below the trendline resistance again, creating a false upside breakout. My decision not to buy small caps at this point or even try to short using the trendline resistance, not shorting IWM but shorting individual small cap stocks, would have resulted in a likely profit because the 360 degrees trades tends to do better than the market ETF. We combine also industry weakness and technical weakness, fundamental weakness when shorting. Now it has created a false upside breakout in weekly. If we look at the at a glance weekly daily at a glance, the false upside breakout also happened at the watermark resistance. Now in fact it has created a triple top. It is more likely than not that IWM will come down more as far as weekly interval is concerned. However, in the daily, just like I mentioned, I showed in the market breadth chart, the swing high is far away from Friday's close. So I would not like to short IWM now. Looking at the weekly, what I would prefer IWM to do is for it to go up little bit, create a lower high and come down. Because we already have a lower low, a lower high will confirm a downtrend beginning of downtrend, and I could look for a flow trend following short setup in small cap stocks if and when that happens. Now I mentioned while explaining the Bengo, the Phoenix and the distribution count on the market breadth chart that external view of market ETFs also gave enough signals. That was on this day. IWM was near jump thrust high at price extreme high, then all of a sudden came a big move down 3. On top of that had a reversal candle, bear release, bearish pressure. As I often mention, and I remember I mentioned right on that day and in that market recap that this signal has so far never failed in stocks. And I mentioned I am to see now if it fails in the ETF IWM. It did not. For IWM also, it has come down below the low of the day that gave that combination of signals, jump thrust high, price extreme high, and big move down 3. So this pattern is continuing to prove its value, that is profitability. Another instrument that gave the same pattern on the same day, that is near jump thrust high, price extreme high, all of a sudden came big move down 3, and also a bearish headwind in this case, bear release, bearish pressure, reversal candle, that was in DIA. DIA has not come below the low of that day yet. Currently, DIA is the strongest of the market ETFs. It is the smallest of the market ETFs in terms of number of constituent stocks. So it is probably easier for it to stay up, just 30 stocks. In any case, because it has not come down below the low of this pattern's candle, low of the day when this pattern came, jump thrust high, price extreme high, big move down 3, I am expecting DIA to come down further. But there is no short setup, so I am not going to short, and because that pattern is still valid, I am not going to buy as well. SPY, it is still not in a downtrend, it is in an uptrend, but it is not giving any buy signal. The traffic light candle color is red. We have a bullish indecision on Friday. Friday was an up day with high volume. We also had a bull release signal, but it is showing in yellow because the candle color itself is red. If price can go above the high of Friday's candle, then one may look to buy. However, I'll be extra cautious because looking at the weekly, I expect market to go down further. What I expect is of course not what I trade. I trade based on actual trade setups, Q3 series trade setups. So if I see Friday's candles high is breached to the upside, I may not mind buying some stocks, fundamentally strong stocks in strong industries that were oversold and are also starting to go up now, if that happens. QQQ, here instead of one we have two, that is a cluster of bullish indecisions at the bottom. That is again telling me that if price starts to go up on Monday, it is okay to buy some, take some long trades, 360 degrees long trades. However, the weekly is not telling that it is going to go up a lot, and those signals were more prominent in the market breadth chart. So for short term, I wouldn't like to short now. I will look for a long setup if market goes up on Monday, Tuesday, but that has not happened yet. So as of Friday's close, I have no preferred trading direction. Let's look at oil. We don't look at the futures, commodity futures every week. Let's look at oil. I wanted to show once again how the memory trend lines, automatically drawn smart trend lines work. One technique I often use is to buy an instrument that has fallen a lot and found support at this trend line supports. If you did that, you could buy right at the low of this candle around this price. Of course, you would buy actually on the daily chart, probably on this day, and then again you could buy at the low of this candle, which would be somewhere here. Those buys would be using the principle of Q bounce long setup, and both of them would be profitable. For bounce setups, it is preferred, at least in my own trading, to use either short put if I can hold the stock outright, if I have the confidence to hold the stock outright, but this is a future or ETF. So instead of shorting the put, I would have preferred short put vertical. Using a short put vertical would allow me to have delta in my favor and also time decay in my favor for both of those trades, and I would be able to close the trades with a profit. Right now, of course, I am not going to have any preferred direction for oil itself. See, at the very bottom, using the bounce setup, I am buying. But the moment it comes to a trend line resistance, I stop buying. So I would book profit if I bought here. I would have booked profit here if I bought here, using the principle that don't hold a long position near a trend line resistance unless the instrument is piercing through it, but it did not in both the cases, so I would have booked profit. Now, I remember I shared a tweet some time ago. Let's look back and see how these concepts and the signals work, and also the preferred trading direction, Pfizer. Ticker is PFE. In terms of fundamentals, Pfizer was strong. It had a decent dividend yield, and then on this day, it came down heavily. I'm not going to look up the tweet, but you may look at my Twitter page or X page now. Right on this day, using intraday charts, I suggested and I did trade a short put on Pfizer if you were comfortable holding the stock if required, if got assigned. I was comfortable with that, and I publicly announced that I did short the put. And for shorting the put, my strategy is to book profit at 50% of max profit, which was hit comfortably by this day or maybe even before that, I don't remember, and I closed the trade. It was a short put trade, profit target was hit, and I closed the trade. Now, some of you may be more long-term traders, though it did not give any trade setup for long-term holding at the bottom when I traded using short put. You see a pattern, the opposite pattern of what I showed in IWM at the top. In this case, we had jump thrust low, price extreme low. Everybody were panicking, and then all of a sudden came a big move up 3 on this candle. That was also a candle that gave a flow signal. using intraday chart and using the oversold nature, using the fundamentals and looking at healthcare stocks outperforming. They were actually outperforming in this period. You could take a long position on this day, putting stop below this candle's low using Q protection signal, and again you could close the trade when it came to the trend line resistance. At least partial profit could be booked. All these analysis and ideas I shared publicly, and you see all of them worked out well. What about last week? Since Christmas, and as you know, I never like to pick and choose. Let's look at the tweets I shared since Christmas last year. But by the way, on the YouTube channel page, Trading Profitably is the YouTube handle. Now you can access all the master classes. Earlier, the master classes were publicly available, but they were not linked to this YouTube channel page. The links were not publicly shared here, but now all the master classes are here. So when I'm describing these system signals techniques, if you want a refresher, you can always go back to the YouTube channel and look at the video that you would like to rewatch if you do. Let me close that. This is my Twitter page. X handle Superior Profit, and December 24th I went to see a nice prayer dance performance. Let's continue from there. December 27th is the day I shared about BMY, and I would like to see the analysis, show the analysis, review the analysis as of that day. What did I see? What did I write first? BMY has displayed several Q technical signals that usually come near the bottom of a stock. What were those signals? Again, those were signals that were opposite to what came in IWM. Here we had jump thrust low, price extreme low, then all of a sudden came a big move up 3. More often than not, as I always say, more often than not, probably always that I have seen, the stock tends to go up after that, provided, and this is important, provided the stock is a 360 degrees stock, meaning I am buying using a proper Q setup and it is fundamentally strong and it is in a relatively strong industry. After that, it tried to go down, created a false downside breakout. At the very bottom came the unique, like many other Q signals, bullish headwind. Price gradually went up and stopped at the trend line resistance. And I'm sharing as of this day, that is 27th December, midday Eastern Standard Time, that if it can break out of the trend line resistance, it may be a technical buy with narrow stop using a pattern that has never failed so far. But you may see that yourself. That was technicals. Fundamentally, I saw using Q scorecard, undervalued stock, great earnings quality, improving earnings growth. Some people trade only based on high earnings growth, but that is not required in my analysis. If the earnings growth is improving, that itself is a catalyst for people to buy, for funds to buy, and for me to buy also. The industry was relatively strong, 78% in itself strong actually. 78% of peer stocks were up. Revenue growth was also going up, as was earnings growth. The company of course makes money, BMY, and I mentioned this also, highlighted that, pays a decent dividend, 4.6% dividend yield. I also attached the Q industry scorecard. As of that day, real time, it was one of the top 20% strongest industries, and the industry was up. So it was a 360 degrees analysis covering all the angles. Remember the first slide of beginning of presentation I explained I combine multiple forces. That's why it tends to work out so well. How has BMY done? Let's now go back to the chart for BMY. Remember, Pfizer was a healthcare stock. BMY was another Pfizer I shared before Christmas. BMY. Which day did I share my tweet? That was this day, 27th December. This was the trendline support. The trendline resistance is not broken yet. However, on a closing basis, price has slightly gone up. So if you followed the tweet or if you used your own analysis that came to the same conclusion, you are still waiting for the trendline resistance to be broken. In other words, for it to go above the triangle pattern, this triangle pattern. Note that though market has come down, for some stocks it has come down quite a lot since 27th December, this stock has not come down. The weekly candle color has also remained bullish. So this is clearly outperforming, which can be seen from the relative performance also tilting up right from the point I shared the analysis. So this trade or trade idea also worked as expected. Now if you, like me, shorted the put for BMY thinking that dividend yield was good enough for us to hold the stock if assigned, you would have a small profit in the trade by Friday. I actually did that and I closed the trade along the way with a small profit. When I saw, actually in fact on this day using real-time charts, I saw that it tried to go above the trendline resistance that I watched, but it did not. So I booked profit on this day. I am again happy to take a long trade in BMY in two ways. One is it tries to go down below the trend line supports and immediately comes back up giving a false downside breakout. Then I would like to short put again, or I would use short put vertical, or one could use covered call also. Covered call as far as PNL graph is concerned is exactly same as short put. So if some of you don't have short put access in some of your trading accounts, you could use covered call. I prefer to use short put. It's a single instrument trade instead of covered call, which is two instrument trade, but covered calls are also fine. That is one approach that I would use to trade BMY again bullish side. Another would be, of course, for BMY to break above this trend line resistance that I mentioned right on this day that I'm watching for the trend line resistance to be broken. That would be another catalyst for me to buy BMY. So if we combine these two catalysts, one is that I could take an initial position when and if this false downside breakout happens, and I could add to that position when the trendline resistance breakout happens. Another approach could be, let's talk about different trading approaches. Take a long position when a false downside breakout happens, book profit in that trade and use further expiry options to take another trade. That could be using long call vertical at this point. See the difference between taking a trade at the bottom using a bounce setup and then using a breakout setup. At the bottom using bounce concept, I am favoring short put vertical, but when it is a breakout trade in the long direction, I am favoring a long call vertical trade. I am not going to buy naked options. There is one exception, as I say, buying put at the very top of a stock, but that is also not often. So BMY once again worked since the time I posted the analysis. Let's go back to Twitter, scroll up. That's great. This is not a stock idea, but December 29th. This is interesting. Let's look at this. December 29, I am sharing that there is probably no other system that shows market internal strength or weakness, strength change in real time as well as QH does. And see how QH looked like on that day, at that time, midday, December 29. 1 month sector industry stock advanced decline breadth was very bullish long term. 10-day was also very bullish. 5-day medium term was also very bullish. Even 2-day was bullish. 1-day weakened a little bit, and in real time, this was the day, December 29th, weakened a lot. That was the day one could start to look for shorts. December 29th. Today is January 6th. Since December 29th, market has fallen, and now many of the market ETFs except DIA, all the other market ETFs are quite a distance below recent swing high. But if you were watching QH like I did, you could catch almost, or why almost, the exact swing high of some of the stocks as they were starting to fall. How is QH breadth today? Let's look at that. Keep that this image in mind. This was live sharing midday December 29, and today is January 6th next year. The long term 1 month view has remained bullish, but 10-day also long term has turned very bearish. This week is bearish. 2-day is also bearish. 1-day Friday is mixed. Let's switch back and forth. This was the tweet I shared. Predominantly green, just starting to be red on real time. In fact, the 1-day was also neutral more or less. Only in real time it was turning bearish, and I could catch the very top of the market move, and now it has turned bearish. However, Friday is indecisive here also. Not only did we see in terms of market internal health check, not only did we see in terms of external view through the ETFs, but sector industry stock breadth on Friday was also indecisive. And because market has fallen enough from recent swing high, I'm not going to short now. I'm not going to buy also. Market can go either way from here. When we came to QH, let's look at the bucket analysis. The bucket is very symmetrical as it usually gets. Symmetrical pyramid pattern. So slightly more bearish than bullish. We can see from here 59% of stocks are below mid Bollinger Band, but more or less evenly distributed across the different buckets of the Bollinger Band. Neither overbought nor oversold can go either way. That is also one reason I am indecisive on preferred trading direction. Let's go back to Twitter page. One thing I said, trading in this way is not only profitable, it is also quite fun because it is all looking at colors and okay, colors. I can like colors and colors maybe. Colors and colors to decide. Let's scroll up. Dollar index. That's great. On Jan 3rd, I shared a tweet on dollar index. But let's go back to dollar index chart. I want to mention something that I shared in earlier market recap before January 3rd. In the last market recap, last week I was traveling. I didn't have the market recap. The one prior to that, the Christmas weekend, I had the market recap and I showed this trend line supports dollar index. And in that recap, I think I mentioned I don't like to look at UUP, the ETF, that is sometimes distorted. I like to look at the index, dollar index DXY, and Metastock Q Global allows me to do that. I looked at this and see in this period, in fact, since the breakdown from a triangle that was here in daily at that point, dollar index was in a downtrend that was helping the market. And I was aware and I shared publicly the existence of this trend line support in weekly. The equivalent trend lines were there in daily, but they got broken. But that is fine. They got broken, but weekly we can see the trend line support is there. Any longer term trend line is also there in shorter term. So the weekly trend line is valid for daily interval also. The daily got broken because of this false downside breakout. In any case, because I was aware of this trend line coming from far away, I was expecting it to hold as it usually does. Trading is a game of probabilities. It was more probable for me that dollar index would hold. That would mean dollar would go up. That would put pressure on the market. That was precisely the time Q Edge also changed sector industry stock breadth. So once again, you could pick the top of the market by looking at the bottom of dollar index and the trend line support. That was then in the last market recap what I explained. But on Jan 3rd, I mentioned something in the tweet. Let's go back to the tweet. 3rd January, midday, Eastern Standard Time, I mentioned about the long-term memory support holding and then mentioned about the daily trendline resistance and the fact that daily was still in a downtrend. What did it mean? I was watching the support and I was able to take bearish trades in stocks right when it was reversing from the support. Then dollar went up, market was in pressure, under pressure, and then I watched the trendline resistance. I was watching for dollar to stop or pause, or it could pierce through the trendline resistance. Does not happen so many times, but eventually, of course, it will break out of trendline resistance, but more often than not, it will create a triangle first before breaking out. But we don't have a triangle yet, so it may move. Let me change the line color. It may move like this, creating a triangle pattern and then break out of the triangle pattern. But we don't have a triangle, we just have a downtrending lines, trend lines in a down. It can pierce through the downtrending trend lines without creating a triangle, but that will need to be a very bullish market. Dollar is a very macroeconomic instrument, doesn't suddenly change from one direction to other. Can change, everything can happen, but I was watching for the trend line resistances to hold. This is what I shared on December 3rd. And how is dollar index today? They actually held. It created a false upside breakout. Just like at the support, it created a false downside breakout. At the resistance, it created a false upside breakout. However, it is not a bearish candle, it is an indecisive candle. And now we see we have not one indecision but two indecisions. Therefore, we have a cluster of indecision at a trendline resistance. Weekly shape and color both are indecisive. Dollar index can go either way from here. Looking at weekly, daily, and therefore the market's directional preference based on dollar index I am not able to decide now. However, one thing that is making me slightly more bullish on dollar index, but not enough to take a trade based on that, is the big move up 3. If you look back for the entire screen length, there is not a single big move up 3 that we had on this day. That was right at the point we had a trend line support in weekly. Will that momentum continue to the upside? That we don't know. But even if it continues, there are many direction lines that are declining. Then more importantly, there is another trend line resistance that is declining. So even if dollar goes up, market may find some pressure. Dollar may eventually come down again. And see, that pattern will play out exactly as I want it to for the market ETFs too. I want the market ETFs to go up little bit and come down. I don't know how that will play out, whether it will happen like that, but dollar may help or hurt that hypothesis, and I can look at the dollar charts and see what is happening. If what is the bullish case for the market? If this support is broken in weekly, then the market may again go up. So I think that is also possible. That is why I am very indecisive on the preferred trading direction this week. Dollar is in a downtrend in weekly. A support held, but that support may get broken. This week's candle is not bullish. The daily is also indecisive at a trendline resistance. Dollar may continue the downtrend. That may give some impetus to the stocks to move to the upside. In any case, in terms of tweets and market recaps, the support that I shared in market recap worked well. The resistance that I shared in the tweet also worked, would have helped us trade with the market's direction. Let's scroll up, look at some other tweets after that. Jan 3rd was the dollar index, and then okay, in between I had a tweet on December 29th on CAH, and on Jan 5th I followed up on that. That's why the sequence is like this. The original tweet on CAH was on 29th December. It is an interesting idea because see, I mentioned the market view was not very bullish. If you look at my tweets from that period, but CAH I shared was a bullish idea. That is possible, and let's look at what I shared again using live analysis before knowing the results, as I always do. I started the tweet saying that on such a bearish day, I am looking for up stocks. The market was very bearish actually on this day, and I have a way to look for strong fundamental stocks in relatively strong industries that are holding well on a weekday. That is how I found CAH was up for the day. It was at trend line support, multiple of them. It was at the yellow direction line to which it pulled back, being in an uptrend. So if it could go up, clear this congestion area, which was also a squeeze in Q, that would give me a pullback setup in a squeeze. That has a very high probability of success. Well, let me say high probability of success, not to dramatize it, high probability, high enough to make a profit in the market, provided, and that is key for 360-degree trades. It's in a relatively strong industry and with strong fundamentals. I checked CAH fundamentals using QVital, undervalued stock with high earnings growth. So it was a 3-star buying candidate. has a relatively small but not insignificant dividend yield, 2%, profitable company. The stock was up. This is what attracted me to the stock in the first place. It was up on a very bearish day in the market. And we can see the bearish day of the market was affecting its peer stocks also. Most of the peer stocks, 80% of peer stocks were down. However, then what caught my attention was seasonality analysis using Q season. In January, it has a 90% bullish seasonality. 90, that's very high, as good as it gets. For a stock with 20 years, maybe it has more history, I don't know. I use 20 years history to calculate seasonality. 90% of the times it goes up in January. And it was right at support in a squeeze with a possible pullback buy setup coming with strong fundamentals. And see, the industry itself was weak, but that is fine. What I need is a relatively strong industry. This industry was relatively strong, and we could see that from pace column showing acceleration. Yes, the industry was down, but relatively speaking, it was doing better than others, which allowed me to buy in the industry. I shared that on 29th December. How did it play out? Let's look at CAH as of Friday's close. By the way, Cardinal Health, CAH was also a healthcare stock. I shared it right on this day. Just after I shared it, it went up. In fact, gave the pullback in an uptrend inside a squeeze setup. It also gave a flow buy setup at trend line support. So that was an easy buying decision. I bought the stock. Stop would be very narrow, just below this trend line support. On Thursday, much more than risk distance was covered. I in fact booked my profit in the trade. It was a stock trade I took. I don't remember the options were liquid enough, but I like the stock. Sometimes I do use stocks, sometimes I use option strategies. I usually never trade long call nakeds option strategies. So I use stock in this case, and I actually booked profit in the trade. So this tweet also worked out. What does it mean worked out? It was a profitable analysis. Let's scroll up. That was the last tweet. So since Christmas, every tweet that I shared turned out to be profitable, but I shared it before knowing the results. And that is what I wanted to highlight through all this analysis, that the Q techniques and systems, they go together. They give truly high probability trades even in such a difficult market. All my sharings were, public sharings were all on the long side, and they worked even in a difficult market. This week my preferred trading direction is indecisive, so I took more time to look back and explain the Q analytics, why it works, how it has worked once again. But let's look at some more things we have not looked at yet for this week, that is technical breadth. The weekly technical breadth is very bearish across all categories. There is nothing here that tells me to buy. The daily is better. Daily is overall a little bit bullish, and we saw the market ETFs are already far away, other than DIA, from a swing high. It has fallen a lot, and several market ETFs, especially QQQ but also SPY, showing indecision at the bottom. So if, as I mentioned, if the SPY QQQ go up above the high of Friday's candle, or you could use intraday fine-tune charts on Monday, in the morning session to find your entry, you could look to buy some of these stocks that gave a buy setup on Friday. I would not buy on Friday, but you could watch the market using real-time breadth charts on elite and global both, and then decide to enter some of those stocks. I would not like to do that now. I'm anyway at 1 hour point. Or would I do that now? I have 5 minutes. And what I wanted to show is something I am working on. I had that in mind for a long time. Let's see if you can notice any difference when I use the Q scorecard in Vital or Edge, the stock scorecard. Let's look at some of the bullish stocks. Friday's technical breadth was slightly more bullish in terms, but that's not enough for me to buy the stocks on Friday itself. But I may add some of these stocks to my bullish watch list for next week and see how the market does. Market is very important. At least 50% of weightage I give to the market. Let's look at the trade setups. 81 stocks, and you see immediately when you see several stocks went up by large percentages, several stocks gave more than one possible trade setups. Some of them flow breakout, some of them also gave breakout from squeeze. You know, there could be some buying candidates, and that shows whatever be the market condition, we may be able to find some trading ideas. Let's look at the ones that are inside a squeeze. Flag for them. Inside a squeeze, why don't I look for breakout? And I see some breakouts with flow, only 3 remains. So see what I did. Just using few clicks after running Q Finder, seeing it visually. First what I did, I looked at the daily technical breadth. I saw that overall it is slightly more bullish. Then I went to all the signals, and squeeze move is a very powerful pattern. I saw breakouts from squeeze with bullish flow. Starting with thousands of stocks, I ended up with only 4 stocks. And 4 stocks, it is easy to open on the charts. Let's look at them technically first. If I find something interesting technically, I look at its Q scorecard and maybe industry strength. CHK. Because I am not having any preferred trading direction, let me be very strict with my technical chart. CHK has a breakout from a squeeze, but it has an upper tail stopping right at the yellow direction line. Let me skip that. ETRN, also energy. CHK was also, I think, energy stock. ETRN, energy stock, breaking out from a squeeze with a bullish flow setup, but it is at a very high price level, price extreme high. There are people who like to buy stocks that are breaking out of extreme high level. This is a buy candidate for them, not my style, so I'll skip this. AMPY broke out of some trendline resistance but has other trendline resistances nearby. I'll skip that. LUV, Southwest Airlines, broke out of one trendline resistance, this lower one, and has another one right before it. This is one I am interested in looking at. By the way, when you look back, notice that beautiful pattern in Q working once again. Jump thrust low, price extreme low, all of a sudden came big move up 3. It almost never fails. The stock went up. I'm sure at the very bottom on this day, very few people, retail traders, would have the confidence to buy. It was in a sharp downtrend. We had just one up day, but the Q signals combined together created a pattern that would allow at least me to buy probably using short put if I was willing to hold the stock long term if assigned, or short put verticals. Then it went up, never had a pullback other than in recent days, and then went up again with high volume on Friday. Friday was an indecisive day in the market, but this stock went up right from the yellow direction line. Stock in an uptrend pullback to yellow direction line went up, so pullback setup, but I would not buy because a trend line resistance is just above the high of Friday, but I'm willing to look at it, add it to my watch list and see how it does next week. If it breaks through the trend line resistance, and I looked at it through weekly daily, it's even better. Weekly backdrop is bullish, and this week's candle has a bullish shape also. Weekly also has a trend line resistance. If the daily trend line is broken resistance, weekly will also break. That is a very nice pattern, and somebody may also see a cup and handle pattern in that, but I don't use that. I will be very happy to buy LUV if the trendline resistances are broken. In fact, if you look back after this long downtrend, this will be the first trend following long setup possible. I would have bought on this day also, but that was using a different pattern. For a trend following setup, this would be the first trend following setup in stage 2 uptrend, as IBD traders say, stage 2 uptrend. So I found some interesting stock technically. Now I would like to look at it using Q Vital. I always wanted to know a stock's market capitalization category looking at its scorecard. I had that in mind. I never implemented it. During the year-end road trip, I spent a few days to have that indication using certain market cap ranges. There are different ranges that are possible. So LUV, instantly I know from this color coding on the symbol, that is RIC, Reuters symbol, that it is a large cap stock. How can I use it? Remember, on Q Global, I have a market breadth chart in real time, market percentage chart. Now it will be a little bit distorted because market is closed, but in real time it shows whether small cap is outperforming or large cap or mega cap. This is only a real time chart, and I can see in real time after market open at this point which ones are outperforming. So on Monday, if I see that large caps are doing better, going up more strongly, then I'll have even more confidence to buy LUV, because I now know without going through any other website that LUV is a large cap stock. And see its internal strength. On Friday, when the market was not very strong, indecisive, in fact 87, that's a very high. I'm doing it live, I didn't look at it earlier. 87% of peer stocks went up. The stock itself is medium valued, not great earnings growth, funds are not buying, dividend yield is small, not large enough, profitable company. So LUV I was interested in terms of technically. Industry wise, it looks good internally. Let's look at Q Edge industry strength scorecard. It is one of the top 20% strongest industries, and the industry is actually up in a weak market. So industry is telling I am all okay to buy. Fundamentally, I have a bit of a hesitation. So that is the power of Vital also. It doesn't only look at fundamental scorecard, it does a peer analysis and allows me to look at the peer stock scorecard. And notice here also, this version is yet to be released. Instantly I know which one of the stocks are small cap, orangish color, mid cap, yellow, and green is large cap. Cyan will be mega cap like cap. So let's see which ones are at least 1 star. In a weak market, I'm okay to buy them. DAL, Delta Airlines, UL, United Airlines, these are 2 large caps. CPA, mid cap, ALJT, small cap. All are having high earnings growth. 2 of them are also undervalued. So 2 of them are actually 3 star. Is there any diamond? No. 3 star, 2. Why don't I look at these 2? Okay, time to look at them. CPA, Copa Holdings, market weakness is not showing at all in this chart. In an uptrend, very shallow pullback in an uptrend and went up again on Friday. If I have a cyan color candle next day, I may be willing to buy. Not on Friday. Friday I still am indecisive on preparatory duration. Let's look at the next stock. UAL. This chart is very similar to LUV, Southwest Airlines, and this is United Airlines. But I am favoring UAL because technically they are similar. Let's look at it using weekly daily. Yes, very similar. Even in weekly, it has trendline resistance as daily has, just like LUV had. But its fundamentals are much better than LUV. Same industry. So I would like to consider buying UAL. Was there any other stock? No. So that is how I find 360 degrees trades. And I may start with something, but I carry out the peer analysis to see if I have a better candidate, and UAL is such a candidate. There were other airlines. I am not going to spend time looking at all of them, but let's look at UAL one-page scorecard now. A fun activity, in fact, looking at only colors. Same industry, very strong. Great valuation, robust earnings quality. That's important because earnings is nearby. High earnings growth, makes money. And because earnings is nearby, seasonality is not a requirement for my trading, but let's look at seasonality also, the last dimension of the 360 degrees analysis. Seasonality is neutral for majority of the year. So seasonality doesn't hurt, doesn't benefit taking the trade, but that is fine. Technicals and the 360 degree analysis where fundamentals, industry strength are combined is more important for me for trading. So I found one buy watch list, UAL. Why don't I also save it here? Using the live analysis, and these tend to be high probability trades, as I showed once again from the Twitter review. I am beyond 1 hour point, but I am hopeful it was worth it. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you again in the next week's market recap. We'll have another great session again. Have a great weekend. Have a great happy new year, prosperous, profitable new year. And as this live sessions showed once again, as I always say, there is no reason not to do that. Trade profitably. Thank you.